Hello guys, welcome to a Trading Parrot. I'm gonna do the market close update, and yes, I confirm the market structure has changed. At least this is what we could be seeing if we close the daily like this. In today's video, I'm gonna talk about the daily, and I'm gonna include as well the weekly, what could happen if we re-enter the previous range on the weekly as well. We'll deep dive as well into the liquidation pools. We just complete all this red area in here, and we'll try to make fit the narrative of potentially pinching that 100k. But since we are entered the weekend, we'll pay a visit to the CME chart and see how things could look if we did such a thing over the weekend and play with some ideas. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes on a Friday night while you're drinking? You can just hit that like before you order the next beer. Just make sure that you're wearing your headphones and no one notices that you're actually not paying attention to what they're saying because you're watching the Trading Parrot. And just a quick reminder that today is the 30th of May. On the 31st is the last day that you can get trading different with a 25% discount. You use the link in the description to get the discount. Those are the prices that you can get with the discount. And yes, I've done some changes. As you can see, now we have a new kid in town. There is the daily that has joined the party of the red. I had a tough decision to make in here, I have to admit, because I'm doing something that I usually say do not do, which is the daily is pending from a thread to re-enter the previous range. And part of that is the motivation I have to turn it into red together with the 4-hour that has done that a few days ago. And the reason I decided to make that scene is because we have a bearish structure in the price on the daily. We have lower lows and lower highs. And just because of that, I'm going to commit this mistake of switching it to red potentially too early. There's also something we need to talk about in this video, which is the previous range retest that is currently doing the price on the weekly time frame. And if by Sunday we go slightly lower, we could potentially see the weekly flipping too. The 4-hour has an opportunity in here for those of you that want to scalp. And why am I saying scalping? Because there is a big opportunity in here for the price to reverse back up. That could happen over the weekend or early next week. That is just because we are still with this uptrend on weekly and monthly, and on the daily and on the 4-hour we have left some crumbs of bread in the way that could attract these bastards to push the price higher. Call it, let's just close some imbalances before we choose direction. So we need to talk about the 4-hour, we need to talk about the daily changes and the weekly. We're gonna get with that task at hand, and I'm gonna tell you at the end of the video what I think we have the highest likelihood. Of course, my wrap up at the end is just my idea. It's not something that you should trade with 100x or any of that. I don't do that, so why wouldn't you? Why would you? Sorry. Maybe I want some people to get liquidated. No, I'm just joking. Right, so CME is still open. It's trading at 105.190. That is the premium at the moment. And if we were to close right there, you can tell that on the 1-hour we are below support. The previous two times we tested 105.450, so that looks bearish to me for a closing price for CME. If we were to dump further over the weekend, we will leave a gap on the upside, and being in an uptrend that could bring the price back above 100k. So if you are thinking to start to short from here, consider that that could be the case as well. Also notice that over weekends we tend to drop the volume a lot, therefore there is not much volatility in the price. Of course, there's been some exceptions as well. We already have 3 CME gaps on the lower end, so if we had a rally over the weekend and we go, let's say, to 107 to close all the gaps to the upside, then we're gonna leave a 4th CME gap. We already have a 4th in here and it didn't last very long, so that's another consideration to keep in mind. And yet on the 4-hour we continue to print lower lows and lower highs, so that's obviously we are in a downtrend on the 4-hour. That doesn't mean that it's gonna last forever, and that's why we look into the momentum in here and we start looking for clues of a potential reversal. Why am I looking for reversal so So early on the 4 hour, well, 4 hour moves a lot faster than the daily and the weekly. And you can see that the percentile was at 37 and we made it to 34. That means that for the first time since we started moving up from 74K into 112, finally we are starting to roll over on the lows of the momentum. We broke the support on the red line and we are putting a low of 34 versus 37 that we have in early May. We are about to end the month and we are breaking that structure. But at the same time, we are printing a very similar pattern that what we did in the beginning of the month, which could potentially be a double bottom. If we complete a double bottom at this range in here, slightly lower than the whole month, there is a good chance that then this can come at the very least and hit the resistance at 44. And if we get lucky, that could go all the way to new highs of momentum, producing an actual breakout. And as you know, I don't like to trade the actual breakout, but I like to build an idea in here and look for clues in the rest of the charts. It's gonna be tough today because it's Friday, there's less volume, things are closing down for the weekend, therefore we might not see what we're looking for as of today, but maybe in the video of Saturday on Sunday we find something really meaningful towards the idea of a double bottom of the 4 hour time frame. I have moved now the resistance to around 45, I will say. That's where I think we need to go to break out at the moment. So I'm gonna move this down to 45 and see where is that in the price. And you can see what I'm speaking about. We have fair value gaps at 104.8, 106.5, 107.4, and now the resistance is at 106.77. So really price to break out needs to go into 106.77 and beyond, forming a potential double bottom. But at the moment we don't have that. Possibly we could be getting some bullish divergences in this area. So what has happened? We had this double top that we were talking about, and the technical target is around 103, just about $400 we've been away from the technical target. We completely or partially filled this fair value gap in here, and we have the last line in the sand in here to completely re-enter previous range where we were trading here. There is just this order block that pushed the price into the all-time high that is defending us from not going into the previous range. So I will say if we lose the lows of 100 or 101 around that area, we need to be very careful with a sharp move in this direction. Of course, there's always the opportunity of a liquidity hand and back up after we deal with the liquidity pools that I'm going to show you later in the video, but it's very slippery around this area. So going beyond 101 and we are dealing with trouble because this area is where the price goes very fast. There is a lack of structure in the volume profile that we are not seeing, but I know it's there. So for people looking for a short-term play, I will probably consider, depending on your experience and your time availability, a short-term play in here for a potential move back up into 106 fair value gap, possibly into the previous support of 107. That could come, as I say, with the 4 hour reversal signs. On the daily, we are kind of playing with fire in here, right? So we put an all-time high, sure, we rally from the very lows below the range into the range and above the range just to come back below it. So this daily candle has a huge responsibility to tell us whether we have increased likelihood of doing scenario 1 this, scenario 2 that, right? Scenario 1 goes into the point of control, scenario 2 goes to the bottom of the range. So if tonight we close where we are or around that area, specifically below 105.661, we are returning back into the previous range, and that's something that could then bring a little bit more of bearish momentum, a little bit longer lasting than just the retest that we were talking about yesterday. We say if we can manage to close like that above 105 and 600, we are just doing a retest. That's where we closed last night, but we didn't bounce from the retest. We are re-entering. In the daily RSI, you can see how much more momentum we are seeing in here relative to the first leg. There was a leg that was pretty decently sized, and then back up very slowly, and then again speed. So that is showing you that the bears now are in control in the daily time frame too, not just in the 4-hour. The weekly, they still have it, but I'm gonna show you what could cause that we also lose the weekly, just so you know when we lose it, or if we don't lose it, to defend it on the daily with another trade. So the problem is that on the daily, I'm speculating that we have a channel, but I still don't know where that channel is, because these two pivots got just broken. So I don't have a point of reference. This candle in here is an intra candle. I don't know where is it gonna close. So if we move back up in the price, we could produce a pivot, but if we close like this, I don't have any point of reference to place this line. So I'm gonna just leave it open. And this one that you could speculate that, yeah, that could be a pivot, but if today we move back up, well, we can get a breakout, in which case I tend to place these lines in parallel, so I will speculate that it's somewhere there, but it's really weird. I'm just gonna leave it open in an average of 59 for a potential breakout, but let's be ready to change that number if we need to. Support is still very clear, it's 47 today. I changed it because of the speed of the move. I had it at 48, but I think that if we continue at this speed, we are probably going to meet with 46. And the next level of support that we never needed to use, it's the red, the final last line in descending here. Notice that we had this red line like this, we held it twice, and in February we broke it, so we have to move the support to here, and thanks to that now support is at 25, 26. So let's go into the chart and let's look for 26 and 46. So that means that the first support is around 102, and that doesn't surprise me. That's where we have the order block, and it's around where we had the target of 103 from the technical double top that we formed before. After that, that support of 26 is located at 86k, so that's the bottom of the range. So what this is basically telling us is that either in the upcoming days we go and we pinch into 100k and we manage to close slightly around 103, 102.7, somewhere around that area, and then we manage to carry on the upside and we reclaim the breakout from the top of the range, and we need to do it very quickly. Unfortunately, we are in a weekend, which is not the best place to be to reclaim something like this that actually requires a decent amount of volume. I would prefer that we do something like that on a Monday, but doing it on a Monday means that we're gonna put 3 candles Friday, Saturday, and Sunday in the previous range. That also decreases the chances that traders are gonna say, well, we can actually make it, because it's too long. If you lose that 102, then it's very easy, you can see on the daily, to teleport yourself from 103 straight into 96.8, which is the point of control. How easy is that? Well, you can see this candle did it, you can do it again. And if this order block, of course, doesn't work, then you have that final support. That support is as bearish as this last one, where we were hitting the RSI that low, we were around here, which was not necessarily the lowest price, because we started putting bullish divergences. MACD is still with the mouth open, histogram is still increasing, momentum hasn't slowed down yet, and we are reaching the weekly. The weekly is very important if you are long-term investor, of course, and even if you're a swing trader, we are here at support. So meet up with weekly support. This is the support, probably one of the most important ones, because we already broke out from that and we're coming back for a retest. So crossing fingers that the weekly, it's actually gonna respect the top of the range, because the daily so far intra candle not confirmed, it is not, right? Unless in the next 3 hours we reclaim 105.6 and we carry on to the upside. I think there were some options expiring today, and the max pain, I think it was 100k, so there was also an incentive to bring back down the price, and with the options already closed, there is no incentive to continue down, but you can see that the price still carry on going down. On Sunday, we need to monitor this guy in here, which is the weekly stochastic RSI that could be printing a bearish cross right there. We'll look into that on Sunday. Of course, there's still a few days to confirm or discard. The next level of resistance of the SOPR model is this green line at 101.5, pretty much coincides with what is currently attracting the price, which is liquidity pools. We're gonna get into that in just a second. Bear with me. This is the monthly chart, and reminder, we were seeing these levels where the SOPR was hitting every time there is big profit taking. And well, so far it was another peak. There were two peaks, this and this were precisely at that line, and we were saying, well, maybe we get it at 104. The statistics of the percentile were calling for that too. I was just thinking that it's just too low really to make the price peak there, because it's just 104. But well, anyways, it's kind of working so far. And some news about the big whale explorer. A few days ago we were peaking at 128, which was a result of the 33,000 Bitcoin that was deposited into exchanges. These are large holders, so there's a filter there, and it came back down, as I was anticipating during that video, to a lower level, and that is a consequence that there were further outflows as well, and that was compensating and cooling down this level. Still, we had a peak to the upside, but it's not as major as the one we have in around this area where we were at around the 94k. And after so many days in the positives of green for the spot ETFs, we finally have 1 day in the red that is pretty much doing nothing to the total cumulative flow in the chart. We are still very close to the all-time high, and we dropped down from extreme greed this week at 78. Now we are in greed at 60. People consider this a buying opportunity, and I will say when we are reaching those very low levels of the RSI 4-hour, yes, there is an opportunity there which you can use to add into a position, speculating that we can at the very least hit the 4-hour RSI from below as a resistance. After that there can be further downside. So if you are used to entering and then exiting if you see weakness when you hit a resistance, then that could be the setup for you. If you don't want to stick around in the charts and look for those clues, you can just add into a position and look for the next lower low, assuming that you give enough gap in between trades so you don't run out too quickly of cash when you're DCAing. We had 1, 2, 3, 4, 5, 6, 7 weeks in the green, and that is reaching kind of a top multiple years. I think in 10 years those were the tops. We have an 8-week somewhere in the middle, but what follows after is a correction. That correction can be mild or larger, but what we've seen in the history of Bitcoin is that after 7 weeks or more in the green on a weekly candle, we always continue to the upside. That is just past performance. It doesn't need to happen always. Patterns are meant to be broken at some point, just a reminder, but something to think about too. Okay, let's go into the liquidity pools and the order book. This is going to be slightly longer video again, and yeah, we took all the degens that were located here at 105. Those were more than 25x's, and there's still some 25x's in the close proximity to the price, which is precisely at 100.6. If we bring in the 10x's, then this becomes very heavy, actually 100.5. There's plenty of 10x's that were rallying all the way from 100 into 112, and they might be now considering to close positions, and the ones that aren't, well, the price is gonna come so close that they can risk liquidation. Actually, they didn't enter at 100. That's where their stop losses or account liquidations are, so they might be already underwater because their entry must have been a little bit higher. So we are now 4k away from that, and we are about 7.6k away from the top liquidity that we talk about at 113. There were breakouts that were hinting that, but they turned into fakeouts, and they really got lucky, those 10x's. You can tell that not many degens enter in here relative to that, and that tells me that some experienced traders actually enter at this top, as opposed to the degens that just got liquidated today. And in the long term, you can see that liquidity below the price stands out at around 100k, and that is longer term liquidity chart. And I'm gonna do something interesting in here that I have never done, I just realized today, which is I'm gonna remove 3x's, 5x, 10x, and I'm just gonna stick with the 25x's. And what can you see? That the only red that we currently still have open in the longer term is located at 100k. Above the price, there is just a bit that started from 109. So 109, they started with 25x trading there, but not so many people. So it wasn't an overcrowded short that entered right there, and price tends to go first to take care of the degens. So short-term chart says 100k is the most degen area of the price, and the longer term says 100k too. So we have a handshake, and there is a potential to go there to take care of them. 100k is a little bit deeper than the support of this previous range, which is actually 102.7. So price needs to go beyond that to really hit 100k. And at that point, if we go there, all we have for the bulls to survive really is to pinch that and then come back and reclaim this support. If we do that in the shape of a liquidity hand, we have a big opportunity for upside. But at the point that you get into 100k, you are already in the slippery zone, right? Slippery zone is all this area that there is the fair value gap, that there is no market structure, and you just literally cross it very fast. So the risk of going into 100k and carrying on into the range of the mid 90s is very high once you hit 100k. I think that is the point I wanted to make. Liquidations on the heat map, you can see that 113 is pretty big, 101 is heavy, maybe as heavy as 93. Let's look at the order book. Let's see what's going on in here. The order book is becoming really boring now. You can see that there is some decent support. We have 400, 400, and 500, multiple 400s in here, defending a fall deeper than 103 as we approach the weekend. That could change at some point. This is just a 5-minute chart, so really I want to show you how they were playing all these past few days and how they defended certain levels. And now we have this wall in here kind of defending the price from 103 to 103.6. You can see perfectly where the levels are currently located on Market Monkey Terminal. They have cleared out open interest pretty significantly over the past few days, and the order depth shows you clearly how they are defending now this 103 from falling any further. There's been big activity when it comes to the bid versus ask ratio. It has peaked at 0.13, hinting that they really want to form on that 4-hour, that double bottom, to have some revenge rally, some dead cat bounce we could call it, because this has fallen pretty sharply into weekly support. So it is an opportunity for a long, if you ask me, this area in here. Is it guaranteed that it's gonna hold? Absolutely not. You have to manage your risk as always, but it is an opportunity. The opportunity is also to go and liquidate all these liquidation levels to the upside, that now we have petrol to go up with 669k. That is pretty significant. We haven't seen this since we were around 74. And we also have plenty of fair value gaps to consume. We haven't fully consumed this one here below that goes up until 103.4, and that's because there is that buying wall defending it. They are defending probably the point of control of this range, that right there. Defending it from what? From going into the bottom of the range and then entering into the slippery zone of the fair value gap. No market structure there, and we cross it very fast up. We can cross it very fast down. General markets are very flat. This week has been really boring for stocks. They are all stuck in the resistance. S&P, Nasdaq is the same. Nasdaq did a little bit more positive. There were some companies giving good results. I think Nvidia included, and thanks to that it has mildly moved up, but it's been sold off as well. It went to 21,780 and it retraced 400 over the week right against resistance, which is still not a great sign for these indexes. And of course, thanks to the moves of Bitcoin, well, all the altcoins are currently suffering. Guys, if you want to trade on a non-KYC exchange, Bitcoin and altcoins, consider my campaign down in the description for Bluffing. This is a non-KYC exchange and you can win up to $10,000 up until the 10th of June. Just create a new account with the link in the description, and depending on the size of deposit and trading volume, you can get these rewards listed in the page. Later, you can use my QR code to validate your Bluffing account with a Telegram bot and get to claim any of the products in my page for free. Thanks so much for watching, enjoy the weekend, and I'll see you tomorrow. Bye bye.